Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, you see, I kind of thought this market would start to come in, but so far I've been completely wrong on that. They just keep pushing it up higher. Now, the original reason I thought we'd start to come in is the HYG fell below the 20-day, then fell below the 50-day. Finally felt like there was going to be a pullback, but somebody's flooding money in there buying up the junk bonds. Are you buying the junk bonds? I'm not buying them. I think we all know who's buying them. Federal Reserve loves the junk bonds, right? So they're sending the market up higher. That's how they push liquidity into the marketplace. Now, when the junk bonds start to come down again, I'll take another shot to the downside. But I do think we're running into resistance. I do think we'll start to come down. Now, Tom Lee, he's a very smart Wall Street guy, right? He says 7,500 on the S&P by the end of the year. So far, he's pretty predictably right? I mean, we could hit 7,500. I actually think we won't. I actually think we're going to have a correction. We'll see. Maybe he's right. I'm not saying he's wrong. I'm just saying I'm betting on the correction. That's all. All right, today we're going to talk about some different stuff. First of all, we had some good news, right? We had 3% inflation come out, right? And they think that's really good news because that's what the stock market rallied on, right? It heard that inflation's 3%. We're going to go up higher, right? And they're going to cut interest rates, which should get that inflation up 4, 5, 6, 7, 8, 9, 10%, right? Because that's a smart thing to do when you're running 3% inflation. That's by their numbers, right? We know it's really 8 to 10% when you measure it the way it's supposed to be measured. But if you told the truth, that would scare the people. You don't want to scare the people, so they tell you it's at 3%. Well, okay, all right. Let's talk about what's really going on. Now, you got inflation running hot, right? Okay, we're cutting interest rates. What's that going to do to the gold price? Now, my take is it's going to go much higher. But Mike, they've knocked it down below 4,000. Yes, they did. Why'd they do that? Well, so they can pick up the mining stocks. The mining stocks are just getting clubbed over the head. And actually, it's a really good entry point for the mining stocks. I know they're up 100% for the year still, but they've come down. And that's why people want to get into them. You're not going to see gold below 4,000 too much longer. Not going to see silver below $50 too much longer. They're going to continue to push this up. Now, I want to talk about a controversial topic today. Controversial topic. I want to talk about, well, robber barons, right? Okay, this is the millennials are calling the boomers, I'm a boomer, the robber barons, right? And for good reason, right? I mean, when we took over the economy, that was back in, let's call it 1980, right? I was a young whippersnapper in my 20s back in the 1980s. And how much was the debt? Well, it was $900 billion, right? So during my lifetime, we printed 38 trillion now in debt. We've got unfunded liabilities of another 120 trillion, and we've been able to profit off of this. Now you say, how have the boomers profit off of this? Well, we profit off of it by our houses going up so much, right? By the stock market going up so much. We talked about in the last video, if you didn't print the 38 trillion, the stock market would nowhere be anywhere close to where it's at. Houses would be nowhere close to where it's at. So we bought the assets back in the 80s and we've ridden them up, right? I mean, we've ridden up the housing market, we've ridden up the stock market, and we pulled from, well, the future generations, the millennials, the Gen Zers, the Gen whatevers, all the young people. They're going to have to pay for it, right? And we've had the great life. Well, that's how they see it, right? That we are the robber barons, and they got a point, right? I mean, back in the day, average price house was about 2.5 to 3 times the average price income. Now it's closer to 7 to 8 times the average price income. My area, 10 to 12 times, maybe 15 times the average price income if you want to buy an actual house. I mean, it's really gotten out of hand, right? But in the old days, when we were buying the houses before the assets inflated upwards, well, we were paying 2.5 times the average income. We could get into a house, we could write it out, right? Write it all the way up, print the money, and don't get me wrong, they're going to continue to print the money for the younger generation, but it's going to blow up on them, right? And I do feel feel sorry for them because it's going to blow on their watch, right? They're going to have to figure out how to pay for our sins. And I mean, I'm actually agreeing with them on that. I mean, the hate stuff, they shouldn't have to hate. They're the ones that they old enough to vote now. They're voting in these people. They're voting in these politicians. I want to get rid of all of them. I want to get rid of the Federal Reserve. I'm a hater when it comes to politicians. I'm a hater when it comes to the Federal Reserve. When this thing blows, I think the Federal Reserve will be gone. I think all these politicians will be gone, and we'll get in responsible ones. Now, first, we're going to go socialism, which is really scary. That New York election, we got the socialist in there. He's going to win and make the capital. I mean, that's like the capitalism's capital, right? I mean, he's going to be a socialist in there. It's going to be scary times for us, right? So we're going to go socialist first. I mean, you talk to college students, 70% of them prefer socialism over capitalism. Now, to me, that's just shocking. They're not old enough to know what happens in socialist country. Now, a lot of you leave comments about all these countries that are doing so well that are socialists. Look, it doesn't work that way. It just doesn't. That's not the way it works. Now, in the old days, even here, we tried socialism during the Pilgrims, right? So the Pilgrims, it was like everybody would share everything, right? And well, only so many people did work, and there wasn't enough to go around, right? So they all shared their farm products together, and doesn't matter how many your farm products you brought, you got to take as many as you want because it was one big pile. And there was always a shortage. You see, Thanksgiving came about when the Pilgrims went to capitalism. Everybody had their separate farm, and then they traded with each other, and there was an abundance because everybody worked. Socialism, only the dumb people work, right? The smart ones sit back and just collect the rewards from the ones that are working. But capitalism is what brought Thanksgiving there because there was an overabundance because capitalism came into work. Well, this goes way back. I mean, you can talk socialism, country after country after country after country, failure. But 70% of our college students want to see socialism, and I believe we'll go that way first, right? Well, everything will crash. Capitalism will get blamed, and we'll go socialism in this country, which will be very sad. And then we'll have to watch that melt down before we get back to capitalism. But when we get back to capitalism, we're going to do it without a Federal Reserve. We're going to do it by getting back to honest money, the sound money, the gold and silver, God's money, if you will. Everything funnels into gold and silver, right? You got all the derivatives are shooting off of it, and all the purchasing power will come funneling down into gold and silver, into real money. Real money, it's honest, it's anonymous, and that's how Tall Mike likes his money. I like my money honest and anonymous. Nobody needs to know how much money I have, but I want my money to hold its value, to hold its worth, right? I mean, to hold up what I can buy with it. You see, if I'm in the dollars saving my money every month, I can't buy as much. I go to the grocery store, I can't buy as much. This was ridiculous. I just got to mention this. This was totally off the wall. Anyways, I had to go buy a present for somebody at See's Candy, right? See's Candy. Okay, how much is a 2-pound box of candy? 2-pound box, right? Now, we stuffed it full, right? I mean, it might have been 2.2 pounds, and it was like special. I mean, picked out which ones we wanted in there because it was a gift and everything. Well, anyways, it came to over $80. $80 for 2 pounds of See's Candy. Warren Buffett, you got too much money. I think that's Warren Buffett's company, if I'm not mistaken, but there's no inflation though, right? I mean, that's chocolate. That's just chocolate, right? $80 for 2 pounds? That's ridiculous. Anyways, everything's going up, right? So what you got to do to protect yourself? You got to get some gold. You got to get some silver. That's what you do to protect yourself. And right now they're on sale. Silver below $50, gold hovering around that 4,000 level. I mean, these are bargains. These are cheap. People think they're expensive here because they're at record highs. Going to go much higher. Don't get me wrong. Gold can come down $3,500. Silver can come down $40. That would be a gift, and you want to get out there and get it while you can. Now everybody said, but Mike, look at the 1980s. Gold went from $800 down to $250. It could easily go from $4,000 down to 2,000. Harry Dent's calling for 1,100. Maybe it goes from 4,000 to 1,100. I lost all my money. I'll tell you, there's a lot of difference between the 1980s and now, right? Okay, in the 70s, we ran it up to $800. And it is true, it came back to $250. Did that for several reasons. One reason, we went on the petrodollar, right? We went out and we said, okay, the petrodollar is going to replace the gold standard. You got to buy oil in dollars only. That is gone. Petrodollar is gone. That doesn't happen anymore. There was this guy, right? This guy, Reagan hired him, I believe. Anyways, Volcker. Volcker comes in, right? And Reagan says, smash that inflation on the head because you had inflation up at 18%, 20%. See, measure it back that way. We're halfway there right now, right? We're halfway inflation there. Don't worry, we're going to get all the way there. Just give them a little bit of time. They're going to figure out how to do it. They're going to figure out how to pass that number. But Volcker comes in. Okay, he comes in when inflation's at 18%. He goes, great. Interest rates are now 20%. Okay, so Volcker, he crashed down the price of gold. Look, if you get interest rates to 20% again, people are going to dump the gold and go at 20% interest rates. But can we do that? Does anyone have the guts to do that? We know Jerome don't have the guts. Donald would beat him up, right? Donald wants interest rates at zero. And that's why you see gold going like this. But here's the thing. You're going to get the short end of the curve going to zero, but you're going to get that long end spiking up. And if you get that long end spiking up 10, 12, 14%, that's where your mortgage is, right? And your mortgage is going to be above that because that's just the long end. So if you get the long end to 14, you're going to have an 18% mortgage. Nobody's going to buy your house. Houses are going to plummet, but you might get that long end up there, 18, 20, 25%. And that's going to be competitive to gold. But here's the thing. Bonds are the problem, right? Nobody believes the United States can pay the money anymore. Gold is now a tier one asset, just like the bonds. Which would you rather have, tier one gold or tier one bonds? I think the world has spoken. Everybody's getting into tier one gold because they don't want our dollars. They don't want our bonds, but that's what's happening, right? So Volcker, he comes in and puts 20% on. We can't do that now. Government would be bankrupt. Everything would come crashing down, but you may see it crash anyway. You're going to see it crash anyway because we're going to lower the short end. Long end's going to spike, and the whole thing is a house of cards. It's going to come tumbling down. Now, that's just my take. Your take may be completely different. Your take may be like Harry Dent that thinks gold's going to be 1,100. I hope Harry's right because I want some more wealth. You see, that's what gold is. It's real money. It's wealth, right? And if it gets down to 1,100, oh, that would be so exciting. I would be joyous over that, right? But no, it's going the other way. We'll see how long it stays below 4,000, but it's going to go 4,000, 6,000 by the time Donald's out. And I was making that call when gold was still 2,700. I said by the time Donald gets out, it's going to be more than double, going to be 6,000 because Donald loves gold, right? He's the man with the gold makes the rules. Well, here's the thing. You see, he thinks he's making the rules, right? Because he thinks that we have the gold, right? Fort Knox cobwebs, right? They're restacking it now, right? They're buying a lot of gold right now. They're rebuying it, buying it. You're seeing tonnage coming into the United States. But here's the thing. So you got China, right? China used to have $1.5 trillion of our bonds, right? Well, now they only have 800 billion. They cut that in half, right? Because they know what the Donald's doing. He wants a weaker dollar. The Donald comes out and says, I want a weaker dollar. The reason he says that, he says you can make more money with the weaker dollar. What he means by that is his billionaire friends are going to get more and more wealthy while the poor get more and more poor as the dollar gets weaker. But you see, the Chinese people, they're laughing at us. I mean, it's really sad how they're laughing at us because they dumped their bonds, right? Because those bonds are going to be worthless. So they cut those in half. But what they got? They got probably 5, 6 times as much gold as we have. So every time the Donald devalues the dollar, they're making 5 or 6 times as much money as we do. And when they revalue gold, China's going to be the big winner. It's not going to be the U.S. I'm sorry, it's just not. We don't have the gold. We're going to revalue it. Don't get me wrong, but they're not going to revalue it yet. They're going to let it run up, right? Why revalue it now? It's revaluing itself. It's at 4,000, right? Revalued itself from 2,000 just a couple years ago. Now we're at 4,000. It's going to do that again. It's going to go to 8,000, 10,000. Now, when it gets to 8 or 10,000, that's the time that the United States is going to come in and revalue the gold at 20,000, 30,000, 40,000. And that's where China's going to be. Oh, thank you, Mr. Trump. Thank you, who's ever in office at that time, because we have 40, 50,000 tons of gold while you have You claim you have 8,000, but I don't think we have 8,000. This is just my take. I don't know anything that you don't know. I'm just Tall Mike, old guy with a microphone. People tell you he's a boomer. He's a clown. I love the names you guys have got for him. Anyways, if you like this stuff, give me the thumbs up, punch the subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.